Welcome to CuriousU. I'm Atul Tyagi, and today we are going to talk about something that affects literally every single one of us. And nobody actually talks about it openly: money. Specifically, how do you spend your money as a young professional? How do you spend it? Like, how do you invest? How much should you invest? What type of investment options do you have? Etc. etc. And honestly, I've been struggling with it for a very long time. So I reached out to someone I know. They spent 12 years in investment banking, IPOs, and the financial sector. Welcome, Dr. Rajib Shome. Before we get into the practical stuff, I would like you to tell me a little bit background about yourself, of where you came from, why did you choose finance in the first place.
Okay. First of all, thank you for inviting me in your podcast.
It's a pleasure.
Um, I'm I'm originally from Bangladesh, so I did my undergrad in finance and banking.
Mhm.
Then I did my master's in development economics from University of East Anglia. And then I did my PhD in finance from Bournemouth University, and then I work here as a lecturer in accounting and finance. Before coming to academia and after finishing my graduation, how basically why basically I choose finance as my discipline of a study. It's a very interesting story. So when I pass my college. So in back home we college, and the
Yeah.
exam is called higher secondary certificate, and then we
Mhm.
go to university. So in Bangladesh you have to take a very difficult exam to get into the good university. So I went to a university called the University of Dhaka, which is from the Dhaka, the capital of Bangladesh.
Mhm.
So I took the exam. So we have units. So we have one unit for commerce, which is accounting, finance, management, and marketing. So we only have four disciplines or subjects in that time when I went to university. And then we have another unit for humanities, and then we have for science. So since I was interested in commerce, so I take the commerce unit, and then I take the social science unit as well.
Right.
So I did very well in that exam. I think I stood 49th in the social science one and the 69 in the no, so the commerce one I was 49th and the 69 in the
Mhm.
social science one. So I could have take any discipline within the
Right.
commerce unit. So my mother wanted me to take accounting,
Okay.
whereas my father is an artist. So my mother is a banker, my father is an artist. My
Okay.
father wanted me to be an journalist because I was also doing a bit of photography that time.
Mhm.
So I got very confused, and because I was a very young kid that time, and I thought like then that time accounting was a bit boring to me. I wanted to study basically marketing because I was always good with people. So but my mother said, no, 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 if you study accounting, because in that time our parents concept was, if you study marketing, you
Yeah.
end up as a marketing representative for the pharmaceutical companies. I'm
Okay.
talking about in 2007 8
Okay.
no, sorry, I'm talking about 2000 1999 2000, this time period.
Okay.
So I start university in 2000. So then one of my friends says, why don't we study finance?
Mhm.
So I said, what is finance? He said, it's a study, it's a study of money I had. He also didn't know what is finance. So I said, okay, fine, like it sounds good, like we will study how to make money. That was my understanding. We will be taught how
Yeah.
to make money.
Right.
So I thought, okay, fine, let's do it. So
Mhm.
in the then we had also interview, but in the interview you basically say which topic, which
Right.
discipline you want to take. So I said my mother, yeah, I will take accounting. But when the time came in the interview, I said, yeah, I will do finance. So my mother was a bit upset about my choice of subject, and my father said, will you be able to do it?
Mhm.
I said, yeah, let's see. That's
Yeah.
how basically I started. I did okay in my undergrad time,
Mhm.
but when I finished the university, I was very lucky that straight away I got a job in a very corporate finance related job. So I started my career as a financial analyst in a financial rating company. So it was very focused on corporate finance job. So then I basically started loving finance, because
Right.
when you are a kid, you are learning stuff, everything is boring to you, right? Because
Right.
you are taught hard things in a very hard way. You also sometimes don't understand why you are learning all those things, why you are learning all those models which basically don't make sense in real time sometimes. But when I start working as a financial analyst, then I realize, oh, that's, is they're very relevant in the real life. And basically, if you follow in a very systematic manner in your life, you can really make some good money. After that, I worked for non-banking financial institute as well, who basically they provide funding for projects, for medium and big projects. After that, I came to UK, did my masters, I went back, and when I went back, I started working in the financial markets. So I started working for investment banks. Then I went to brokerage house. Before coming to academia, I was leading a equity brokerage house, a medium-sized equity brokerage house. So my life before academia was mostly working in financial industries. And what I knew and what I learned from working, I think I worked for 13-14 years before starting my PhD, is every decision that we make in our day-to-day life is basically an investment decision. It's either investing your money, or investing your time, or investing your emotion.
Right.
So
Yeah.
if you basically try to measure your any decision in terms as an investment decision,
Right.
not as an emotional decision, or not as just as a random decision.
Right.
If you can build a systematic way in your brain, so every decision you basically try to find out what is the cost benefit of
Analysis.
of
Yeah.
of analysis of that any decision. I think it really helps. It really helps you to make a rational person,
Right.
and it helps you to basically achieve any sort of success, financial and non-financial, in a very systematic way. And if you ask me, like, what is finance and why it's so practical? So finance is, though we think finance is basically like it's a study of money,
Right.
but what type of studies and what type of money, because the money is a huge thing, because it covers, say, finance covers from personal finance to public finance.
Yeah.
Public finance
Yeah.
is country's finance, personal finance is your own finance, then you have companies finance, which is corporate finance.
Right.
Then we have financial institutes and services, which is banks, insurance, and those things. We have financial markets, which is stock market, which can then bond market, then alternative markets where you trade, say, oil and metals. We have currency market where so finance basically covers all of this. So it's basically hard to understand and be an expert of everything. But as a finance person or as a finance guy, you must understand the basic of finance.
Okay.
And to me, basic of finance is valuation.
Okay.
So there are many ways you can explain finance and you can give definition of finance. But the best definition of finance, which I think is, finance is all about valuing something. It can be this coffee cup, it can be our life, it can be Tesla as a company, it can be, say, Ecuador as a country.
Okay.
So if you value anything, how close your valuation is to the real value is how successful a finance guy you are. So if you are valuing Tesla as a company, or if you are valuing a person's potential, what you do is you basically try to understand how they will, say, how they will do in life,
Right.
in future,
Right.
based on their past data,
Right.
but past do not always do a appropriate forecast of future. Why? Because future is uncertain.
Right.
So you need to make lots of assumptions. And those who can make those assumptions more realistically are those people who can take the decisions more close to the reality.
Okay.
So real life is all about making assumption of future.
Right.
Finance is also making assumption of future. So if so we say this person is a very insightful person, or this person can see future. What does it mean? That means if he says this thing will happen in future, at least something similar happens. So we think those
Right.
people are intelligent people, those people are people with wisdom.
Right.
Same if you say Tesla's stock say will be this in 5 years time, 10 years time, or overall valuation of Apple will be this. You
Right.
need to make a lots of assumption of future, and that
Right.
assumption based on Apple's past
Yeah.
performance,
Yeah.
or Tesla's performance, and your understanding of future, overall future, economic situation of future, and the company's performance in future as well. So the more you understand the real world, the more successful finance person you are.
Right.
So it basically to be a successful finance person, you need to have, what you need to have is common sense.
Yeah.
So which is again very uncommon to people, so you need to think clearly.
it.
You need to think clearly of every situation, what can bring it to you, to the society, to the country, to the world as a whole, and what its impact can be.
Right. So, I mean, you said like you have to forecast the future, what's
Yeah.
going to happen. Is it, do you follow certain patterns? Okay, these things happened in the past, and these are the things I'm seeing again. Does that mean they're going to yield the same result? Is that what you mean when you say you were going to like do the
Yeah.
future forecasting?
Sort of. So as a finance person, or as any person who works with number,
Yeah.
the only way of forecasting is you basically take the past data, and then you try to find out whether the same pattern will happen in future or not.
Okay.
But rarely in real world the same thing basically happens, similar thing happens. For example, we have seen lots of financial market crash in our history. But the for example, the first big one we talk about is the 1930, the Great Depression.
Right.
And it was also caused by a stock market fall. But that time the world stock market was not similar to today's one. A stock market crash today will be much more devastating.
Right.
But on 1930, there are photos that people are queuing for bread in New York. But that thing may not happen because we have a lots of safety nets.
Right.
But you may see banks are falling even today, which used to happen in earlier days as well. For example, the financial crash in 2007-8, the great financial GFC, the great financial crisis,
Yeah.
is also bank run. Bank run means basically bank goes bankrupt.
Yes.
But that was very, very different than what happened in 1930. So the financial crisis we are seeing now because of the Ukraine war, because of the Iran war,
Yeah.
this is it has symptom from previous financial turbulence, but
Right.
it has its own characteristics as well. So you definitely will have some previous characteristics, and then you will have some new characteristics. So the more efficiently you can basically forecast the new characteristics and how they are going to impact the previous performance on previous type of thing is basically makes your prediction more
Right.
more
I understand.
appropriate, more
Yeah.
close to the reality.
Reality.
Um, And then another thing I would like to say is finance is a bit different than economics in this,
Okay. How is that?
because economics is more theoretical, and
Okay.
economics and finance also have some cross disciplinary thing, because economics also deals with a lot of things that's also core of finance. For example, interest rate, recession, then this say interest rate, unemployment. So the macroeconomic factors that basically impacts our financial markets is also covered by economics.
Okay.
But economics is more theoretical, and economics is basically a problem of a study of scarcity, because in our world we have less resource,
Okay.
but uh, so we cannot satisfy all of our need.
Right.
So we need to choose which one basically we will be doing and which one to forego,
Right.
which is basically called
Prioritize
yeah.
like
So
which one? Yeah.
prioritizing things. So what, for example, now we are talking here, instead of doing this podcast, we could have basically stayed at home and take rest, because today is
Right.
Sunday.
Yeah.
We could have go outside, today is a sunny
Yeah.
day, and
Yeah.
enjoy the day. So we basically
Right.
choose to do the podcast.
Yeah.
So this is our choice,
Mm-hmm.
and those are our opportunity cost that we forego
Yes.
to shoot this forecast. Our life is all about choosing and foregoing things.
Right.
So this is covered in economics,
Mm-hmm.
but the impact in our real life in financial term is basically finance, and economics is also about cost benefit analysis, and finance is also the valuation of that cost
Yes.
and the benefit in financial term. So yeah, it's all about
Yeah.
basically trying to figure out
Right.
the world, the real world, in financial term.
Right. So you mentioned like accounting earlier when you were telling me about how you started and you were into accounting and finance. What I mean, you explained me the difference between economics and finance. Can you like give me a brief explanation of how does it differentiate between the accounting and the finance, because they are also very closely related terms.
They are very close, and they are also very different as well. So accounting is basically the record keeping side. If we go in a very basic definition of accounting, is basically the record keeping of all the financial transactions. So you basically say you run a company,
Yeah.
or so every day you do lots of transaction. You take all the transactions, and then you basically keep track of all the transactions, and then you try to find out how much money you make,
Right.
and how much money you basically owe to people, how much, what is your payable, what is your receivable, and then after then you try to find out how much is your profit. So the whole accounting is the whole record keeping part. But finance is basically the again the analysis, using the analysis you do using the financial data, and try to understand what will happen in future.
Okay.
So finance is basically, we say finance is basically start
Right.
where accounting finishes. So accounting gives us the financial performance data that a company or a person performed this way, and then
Right.
using the accounting data you try to understand what how the future look like.
Right.
So that's basically finance part. Though accounting also have management accounting, which try to assume future as well,
Okay.
but it's more of try to figure out the costing side of a company. So accounting is basically the record keeping, and finance is basically the forecasting of the future.
Okay.
This is very basic understanding of
Right.
the difference between finance and accounting, but there are some overlap,
course.
but there are which is more important in philosophical or understanding of finance and accounting is there are some basic fundamental difference in understanding. For example, anything you buy with your money is basically your asset. For example, if any your house, your clothes, anything you have is your asset, because it's you bought something with your money. So the money is your finance in accounting term, and whatever you buy with your money is your asset. It can be current asset. Current asset means whose life is less than 1 year, and then it can be fixed asset whose life is more than 1 year. Say your car, your house. A person like us, usually our biggest asset is our house. But in finance,
Yes.
the the definition of asset is very different. In understanding level, whatever brings you money or whatever brings you higher return than your cost is asset. Whatever asset or whatever thing cannot do that is your liabilities. So if you have a house, in accounting term, no matter whether it's a big house or a small house, whether it's an expensive house or a cheaper house, it's an asset. But in finance term, if the house fails to bring you a higher return or higher utility than its cost,
Right.
if it can bring higher return or higher utility, only then it will be treated as an asset. Otherwise, it's a liability.
Right. I understand.
So if your house, for example, if your house, say you have a house and you pay mortgage, say hypothetically your mortgage payment is 700 pounds per month, but you can rent a similar house or similar flat, say in 500 pounds, then it's not an asset. We were losing money.
But isn't it like we're not gonna gain? For example, as you said, I have 700 mortgage for a house, but doesn't the time cost money?
Yeah, so
which is not gonna,
so time value of money, we assume
time value of money.
that at some point of time
Yeah.
our house value will increase, but it may or may not happen.
Right.
Again, with that money, with that extra money, if you would have invested, say in a stock, you might have get higher return.
Higher return. Okay.
So all those things will be considered when you try to decide whether it's an asset or it's a liability in finance. But in accounting, it's always an asset. Even if you are losing money, but it's an asset. And if you lose money, then at some point you basically adjust it by creating a loss. But in finance, it's not an asset unless it's giving you higher return than its cost.
Yeah. Exactly. So how do we follow our life according to accounting terms or the financial terms?
I think we need to understand all these things.
Yeah.
We need to do our record keeping. If you are talking about personal finance, then we must be an accountant.
Okay.
And we must have an proper accounts of our. I'm not saying you basically keep track of every transaction. But you must have a budget sort of thing, say an Excel file where you can see how much money you have in your bank, how much money you have invested, if you have investment, if you have savings, how much money if you make a loan to someone. You must have an Excel file which tells you how much money you have in different ways. So that's an accountant of you. And then you must be a finance guy to make a proper rational decision in your in every aspects of your life. Even if you are buying a shirt, if you are buying a coffee, if you are sending your son to a private school, all of these are basically finance decision because you are involving money. If not money, you are investing your time or involving your time. So we must follow all of this. And I sometimes say people are a person is an
Yeah.
accountant,
Right.
a person is an economist,
Yeah.
a person is a finance person or a finance guy.
Yeah.
Because you may say, I am not a finance guy at all, but maybe you are a finance guy, but you are a very bad one. Or maybe you are a very good finance guy, you don't know.
Right.
But we must have to do some sort of accounting in our life, right?
Right.
Because you must know how much money you have in your bank when you are even going for grocery. Otherwise, or you must have some sort of
Right.
accounting going on in your life. Otherwise,
Yeah.
you will be messed up.
Yeah, I understand what you mean.
So you must have to do some sort of accounting thing in your life.
Yeah.
We all are economists, because economist is all about cost benefit analysis. Economist is all about scarcity, facing scarcity. Economics is all about opportunity cost in our life. Even if we don't know it, every day we make choices.
Yeah.
Whether it's rational, whether we make a rational choice or irrational choice, that's basically a job of an economist,
Right.
to help us to make a rational choice. But in our life, we always making decisions. We are always making choices. So we are basically an economist as well.
Right.
And then we also take future decisions. We decide to consume, or we decide to save, we decide to invest, we decide not to invest.
Right.
These are all financial decisions.
Right.
So we have to take
Yeah.
financial decisions,
Right.
knowingly or unknowingly, that made us a finance guy.
Right.
But unfortunately, most of us are very bad in these three things,
Yeah.
which is very basic of a human being.
Right.
But we can be a very good engineer.
Yeah.
We can be a very good, most of us are very good, say some of us are very good doctor, some of us are very good lawyer, some of us are very good sportsmen. Whereas you learn those things,
Yeah.
you learned, you trained to be a doctor and became a very good doctor. But
Right.
you may be very bad in your personal finance. But from very early life, you are taking financial decisions. But we are not trained to take rational financial decisions. That's basically make us very bad
Right.
in making, in making our financial life very secure.
Right.
That's why we see always like professional people who are earning a lot of money, always struggling with money.
Right. Yeah.
So in our personal life, we must take rational financial decision. That's what, so we don't struggle financially.
Right.
Yeah, so that's my understanding. Like
Right.
in our personal life, understanding finance and economics is very important. It doesn't mean you need to understand all those difficult models.
Yes.
You may know no models, no economics models, no finance models, but if you can understand the world clearly, if you
Right.
understand the consequence of any action, you are a good economist, you are a good finance person.
Yeah. So, I mean, what you are saying is like every one of us should understand how these things work, so we can make a better decision in life.
Absolutely.
Yeah. Okay. That makes sense. Okay. So, coming back to our the topic of our discussion, which will be money, basically. So, during your career, when you've worked in financial institutions, you've been a teacher, what sort of like bad habits have you seen that people make during their life?
A lot.
Okay.
And I must tell you that the people who are suffering financially, anyone, you take any random person who
Okay.
is struggling financially,
Yeah.
in most cases, it's their fault. Unless you are a victim of a war, you are a victim of something very terrible.
Right. Which is beyond
something
your control,
beyond your
basically.
control.
Yeah.
If you are a victim of a very external events, say you had an accident, you are a victim of war, you lost everything which is very uncertain to you. Otherwise, if you are a normal person, living a normal life, not much outside externality influencing your life, and still you are struggling financially, then it's your problem. That means you are not managing your finance, you are not managing your life properly. And I really, really believe this, because I came from a very modest family. Though my mother was a banker, but she was a regular banker. She was not working in investment bank, and my father was artist, but they didn't have much money, and they had, both of them had a big family, like a lot of brothers and
Yeah,
other
yeah.
thing to take care of them. So we really had less money to consume. So we had a very modest life. We always stayed in a rented house.
Right.
But when I went to university, I studied finance. Then at a very early stage, I started investing money in stock exchange. My mother gave me some money, which I first I bought some, like I applied in some IPOs, because in back home you had to apply. It was like a lottery to IPOs. And then I find out it's sometimes you can get, sometimes you cannot get. So you have to wait for the next IPO to come. So I started investing in secondary market. But in 5-6 years, after 2 years, we had a big crash in our stock market. So I lost a lot of money, but
Okay.
I stayed. But after 8-9 years, I started seeing the difference. When the good days come, I made so much money, and then I started investing in other ways, because when you have some more money, you can do a bit more.
Right. Right.
And then I didn't suffer financial difficulties that much.
Right.
Definitely I'm not
Yeah,
a
yeah.
very rich person, but I'm not financially struggling as well.
Right.
Whereas I can see lot of my friends, or a
Yeah.
lot of people whom I know,
Yeah.
earn a lot of more than me in day-to-day income.
Yeah. Yeah.
But they are still struggling. The main bad habit, I would say, there is always people have a mismatch between their earning and the cost.
Okay.
So
Yeah.
if I ask you, what you can do
Okay.
today
Okay.
to improve your financial situation, not earning, if you want to make your financial situation a bit better, and you have only one day,
Okay.
what you can do?
I mean, I'll try to reduce my cost as much as I can, because I cannot increase the
Yeah, so
income,
the
as you
only
said.
thing
Yeah.
you can do immediately is reduce your cost, and
Yeah.
that's in your control.
Yeah.
Earning is not entirely in your control, right? You can increase your earning, but it
Right.
takes time. The only thing you can do immediately is reduce your cost. And that's the basic of any financial decision. You
Right.
have to reduce your cost of living, cost of production, or anything, without hampering the quality. Now, the quality has a standard, right?
Okay.
Even for a product, when you try to enhance the quality of a product,
Yeah.
it needs to be justified by the cost as well, right?
Right.
For example, if you enhance the quality of a production, but if the gain you receive by selling the product is
Yeah.
lower than the cost you incur to increase the quality of the product, then there is no point of enhancing the quality.
Right.
Now, I'm not saying you should enhance the quality of your life, but you should always think how to reduce the cost of your living.
Yeah.
And I can tell you, there are so many ways people spend their money irrationally.
Yeah. Can you just name a few? Then, yeah. Like I
Say,
can tell you 10 things about
yeah,
me,
yeah.
but
So
yeah.
so I can think of
Yeah.
of a very basic thing. So some people might be very angry with this for example, you may see a lot of people who say goes to Starbucks and it takes say 1 minute to order their coffee.
Yeah.
You put say this type of milk, this type of frappuccino, and then you have say what is it called, the hazelnut splash and other thing.
Yeah, the
So and
syrups.
then with all those syrups and alternative milks and other thing, maybe you pay £5
Yeah,
for a cup of coffee,
about right. Yeah.
and then which is very harmful for your health, because any coffee with milk in it is basically poison. So you cannot basically argue with me that it's
Right.
improving your living standard. It's basically harming your living standard, because any coffee with sugar and milk is basically harmful for your health.
Yeah.
The only coffee you should be drinking is black coffee
Okay.
without sugar.
Yeah.
That's very healthy, and that's helpful
sense.
for your liver.
Mhm.
It saves you from fatty liver.
Mhm.
So if you don't like black coffee, you stop drinking coffee, because it's not. So if we are talking about cost of living and standard of living,
Right.
that coffee is basically harmful for you.
Mhm.
Okay, this is one. So there are many ways.
Right.
You cut down all the junk food you eat.
Yeah.
You basically increase your living cost, living standard.
Yeah.
You reduce your living cost.
Right.
You cut down a bit of eating out. Start cooking by yourself.
Right.
It will increase your living standard. It will reduce your cost.
Right.
If you reduce buying branded clothes, you can reduce your cost.
Yeah.
Instead of Apple phone, Apple Watch, MacBook, you can use for time being.
Yeah.
You can use other brands which is a bit cheaper, and
Yeah.
use all that money, say, to buy Apple stock.
Right. I understand.
So for example, the first time I ride a Tesla car in 2018, I went to US, and then one of my friend had a Tesla car that time. So, and that time, I don't know how it works now. He had to wait few months, I think, for the car to come. So you have to pay, you have to wait, and then you get the car.
Right.
And he was quite rich. I think he didn't have a car loan. I think he paid by himself.
Okay.
So today is 2026. So it's 8 years now, right? I'm sure he is riding another version of Tesla now.
Yeah,
He's
probably,
not riding that
same car,
same Tesla car. Very sure of that. Now, what is the value of that Tesla car now? Very less.
Probably, yeah.
But if he would have bought Tesla stocks that time, someone else would have. Tesla is a self-driven car, but like he would have been a very, very rich person. So what I'm telling you is, the only way you can become rich or financially independent, whatever you say, is through investment. And the early you start, the early you reach your goal. And the only way to start is cutting down your cost wherever you can, and use that money as your investment money. Right. That's the only way. There is no other way to become rich. Another problem is, we think rich people's life is very exciting. It's not. It's very boring. Okay. And we regular people cannot do boring stuff. We like some sort of adventure. Yeah. Or we become worried and bored very easily. That's basically another obstacle, I would say, because if you start investing, it will take at least 10 to 12 years to become financially comfortable. Right. Depending on how good you are doing and how much money you are basically putting in. It's a long time. Yeah. And in that 10, 12 years, you might see huge loss at least 2-3 times.
Okay.
You might see moderate amount of loss 4 or 5 times. You may see huge profit, and all of your profit is gone
Right.
in couple of time as well. Like you made lots of money, and then all of a sudden you find out you basically came back to where you started, or you are
Right.
basically, even after 3-4 years, you will find out you are even worse off because market is volatile.
Yeah.
But if you spend 10 to 12 years, anyone with rational understanding will make money.
Yeah.
But that journey is painful, and that journey is boring. So people cannot basically stay with their plan. They change plans. When you change plan, you harm your investment strategy.
So when you said boring, does it mean like being a disciplined life where you do these things a certain way, or does it mean something else?
So disciplined life is always boring, right?
Okay. Yeah.
So you need to be a disciplined person.
Okay.
This is a boring stuff.
And this is what rich people does. You said. Okay.
And then disciplined investment strategy is more boring. Sometimes you see your stock is not earning money or
Right.
losing money, whereas other people
Yeah.
are making a lot of money.
Right.
Then what you do is you try to sell your stock and jump to other ship, and then you see that other ship is sinking, whereas your one that you just left started going up.
Yeah.
Then you try to change again, and this way you lose all of your money, and all of a sudden, then one day you say enough is enough. This is a gambling. This is a bad thing. This is not for me. Money is not for me. Money is for people who are bad people, evil, whatever, blah blah blah. Then you just then you just leave and try to do something else.
So it is basically a long game. You cannot just.
It is a long game. It is a long game. I think, say, Warren Buffett made his first billion, I think, when he's 52 or 54. He started quite early, but it took him long time.
Right.
But there are other people who became billionaire quite early. Then there are billionaires who basically lost everything in 2-3 times. Then there are billionaires who didn't lost, but it took them long time.
Right.
So it depends on what type of person you are, and this is also, you also need to find out what type of person you are, and then what you basically want from the life, and then tweak your investment decision.
Right. I understand. Okay, so let's go into a bit more numerical terms. So let's imagine. So in UK, there's the average UK wage rate for an year. It's about 30,000 annually. And if you go monthly after taxes and everything, let's say around £2,000 per month. And if someone like me who needs to start investing, or who needs to understand their finances well, how will I budget my things? For example, what should I keep for my essentials? What should I keep for my investing? Do I need an emergency fund? And if I need, how much, etc., etc. And if you just tell me a little bit about this, then I can structure things, and then we can see how does it actually work.
I think if you are earning, say, 30,000, then you should be able to, you should at least invest 10 to 15%.
Okay, so if we go like monthly, it'll be easier for us to understand. So let's go like 2,000 per month.
If you are earning £2,000, you should be able to invest at least £200.
£200.
200 to 200, if you can 300.
Okay, so
200
about 10 to 15%.
Yeah, 10 to 15%, because if 2,000 pounds is a quite tight budget. But I'm sure you should be able to find out at least 200 to 300 pounds. And if you are living in a Western country like UK, life is a bit more certain here. For example, our health is free. There are certain things which is certain uncertainty that we don't face here in this country. So you don't need very large amount of emergency
fund,
fund,
yeah.
like which in if you are in a developing country, then emergency funds is a very important thing. You may need any time,
Exactly.
and
Yes.
at any point of time you may need a huge amount of money for
Yeah.
your health or for anything. So I think, and another thing is your necessary cost should be as low as possible. I'm not saying you should sleep on the street, but your cost of basic things should be at a very basic level.
Okay.
So because in our life anything can happen, we can lose our job, we can have a recession coming, we have two wars going on. Cost of our basic thing is going up almost every month. So to even survive in this world, we should need to know how to keep our basic
Yeah.
cost very minimal.
Right.
If you can have another way of earning, another job or another anything, if you know any skill, if you can earn any money out of that skill, that's very important. Try to find out
Yeah.
a second earning source,
Right.
and then invest. And do not basically rely on investment
Okay.
for your day-to-day living. Do not think you will earn money from your investment and you will be using that money for your upkeeping or your consumption.
Okay.
You just keep investing that money and forget about it. Do not think I will generate return from that money in 2 to 3 years and use it to buy a house or buy a car or something. Keep it for 10 years, keep it for 10,
Okay.
12 years. Only then you will see the return, because of the compounding and whatever return it will be giving you.
Right.
It will take time.
Yes.
And especially when you are starting with less money. But even if you are investing say 200 pounds per month, it's 2,400 pounds per year.
Okay.
And definitely your income will go up. And if your income will go up, if you can find out another way of increasing your income, then if your income increase, do not straight away increase your cost, increase your investment. So if you are earning higher than last year, the first thing you should do is increasing your investment, not your cost.
Right.
And if you are, I also see a lots of people, very good professional people, financially struggling. So for example, say if you are earning say 3,500, 4,000, you should invest at least 30 to 40%. If you are a household where the income is 5,000, 6,000 pounds, both partners are working, they should be able to invest at least 50, 60%.
Okay.
What happened is straight away they increase the cost, the living cost.
Yeah.
They go to a higher
bigger house,
bigger house, bigger
Yeah.
car. So their EMI increases and they
Yeah.
keep struggling.
Yeah.
They send to their kids to private school, and then all of a sudden they find out they are in a very, very difficult financial situation, even after working hard for many years. The reason is they are not accumulating wealth, they are not creating real asset. What they are doing is they are basically just spending money for
Right.
no useful utility.
Right. Okay. Yeah. So I understand, so let's, as we say, 2,000, out of that 15 to 20 to 50%
Yeah.
goes to your investment. How much do you think we should have for our savings? Because I don't think the savings and investment are two different things.
No.
isn't
So
it? Yeah.
for example, in economics or in the financial model, savings and investment is two different things. But
Yeah.
to me, and especially if you are living in a Western country, you don't need to save much. You must have a emergency balance,
Okay.
but because you can foresee your expenses in this country unless you lose your job. So you don't need to have that much emergency fund in this country. Maybe
Maybe like a 6 or 7 months of,
Yeah.
like a half an year of salary saved.
salary, if you are
Okay.
saving, then
Okay.
it's fine.
Yeah.
That's only if you are think that
Of
you
course.
may lose your job. If,
Mhm.
no, so but um, you should try to invest as much as you can.
Right.
So even if you have like, even if you want to save it in somewhere meaningful, save it in a ISA account,
Okay.
save it maybe in a bond, buy a bond
Okay.
which can be sold maybe in 3 months, 6 months.
Okay, and is ISA and bond are like something? Is it like liquid money, so you can
Yeah,
actually
so
just sell
you
it at
can
the same
basically,
time and
if
get
you,
the
yeah,
money?
if you want
Okay.
the money in some sort of ISA account, you can
Okay.
basically
Can you
sell it.
explain a little bit about ISA and
Yeah.
bond? So,
So ISA is, in the UK, ISA is the way people can basically invest or save money tax free. So
okay.
there are savings ISA where you can basically save 20,000, each person can save 20,000 pounds per year
Mm-hmm.
tax free. So the interest you get is tax free. You have stock ISA. In stock ISA, you can basically invest 20,000 pounds per year tax free. So whatever capital gain you make by
Mm-hmm.
trading the stock,
Mm-hmm.
completely tax free. So if you invest wisely, in 3 4 years it should be double,
Mm-hmm.
and completely tax free. So
Right.
these are the ISAs. Then
Right.
you can buy government bond, you can buy corporate bonds. These are debt instrument, these are not ISAs. So
Mm-hmm.
where basically they gives you a specific return every year.
Okay.
If you need your money,
Mm-hmm.
you can basically sell it and get the money. So
Yeah.
bond is much less volatile than stock. So do not keep your money just as it is in the bank.
Mm-hmm.
Try to earn some sort of interest, but you also need to remember,
Mm-hmm.
earning do not make you rich. Savings do not make you
Make you
rich.
rich.
Savings do not cannot make you financially independent because of inflation.
Mm-hmm.
Inflation is always higher than the whatever interest you will be getting from any sort of ISA or other thing, because inflation, because the company who are giving you that interest, they also face inflation.
Mm-hmm.
So savings is always also exposed to inflation. So the
Right.
only way you can basically beat the inflation is through investing.
Mm-hmm.
So my suggestion will be, try to invest as much as you can.
Right.
Keep savings a buffer. If you are
Okay.
worried that you may lose your money, lose your job, and your income
Yep.
will
Mm-hmm.
hamper,
Yeah.
then you may have some sort of buffer, because you can also take out of money from your investment account as well,
Right.
if you are really
Mm-hmm.
really struggling.
Mm-hmm.
But if you are keeping your cost at a very minimum level,
Right.
and if you are smart, if you are taking your decision rationally,
Mm-hmm.
I see no reason someone with skills, someone with education struggling in this world.
Mm. Yeah. Yeah, I understand what you mean. So it's more like you basically managing your money well,
Mhm.
because you have, like, as we say, £2,000 a month. You put 10 to 15% in the investment.
Mhm.
You have some amount as emergency fund, which you just keep it there,
Mhm.
and you don't touch it unless you actually need
Mhm.
it. For the saving, because the way I do it is more like I just keep it in the bank, or
Mhm.
maybe I have like a fixed deposit where I get a certain
Mhm.
amount of interest.
Mhm. Mhm.
But as you said, the bonds and the ISAs,
Mhm.
you can have them like tax free, but on the bonds you can have like extra interest
Extra
than
interest, yeah,
having
yeah.
them on a.
You can even if you are, you can, if you can keep the money
Mhm.
in ISA,
Yeah.
in savings ISA,
Right.
or yeah, try to earn some sort of
Mhm.
investments,
Mhm.
some sort of interest,
Yeah.
but always focus on your investment side,
Right.
because savings is also will hit
Right. Yeah.
by
Mhm.
inflation.
Mhm.
So if you are not very worried about the short term future,
Yeah.
if you think you are okay in the
Mhm.
short term, and the
Right.
short term means 2 to 3 years, you should invest as much as you can. there
Right.
are many ways you can basically invest, even carefully, even if you don't understand the stock market or any financial market very
Mm-hmm.
well. For
Mm-hmm.
example, there are mutual funds.
Mm-hmm.
So check the previous performance of mutual funds and then you invest there. Mutual funds is basically funds who invest in different asset classes, stocks, bonds. So there are even different types of mutual funds. There are
Mm-hmm.
mutual funds who only invest in bond. So
Okay.
those are basically very low risk, low return investment mutual funds. Then there are investment funds that invest both in stock and bond. So those are basically a bit high risk, a more return.
Mm-hmm.
Then there are investment mutual funds only invest in stock, or
Yes.
only invest in stock in developing countries, which is more volatile. So according to your risk, you know
Taking
taking
ability and
ability and
mm-hmm.
appetite,
Yeah.
you can choose many mutual funds. You can buy index funds. You can say you can buy you can just buy every month. You can buy say the New York Stock Exchange index fund.
Yeah.
So you just every month, in a specific day, whatever savings you have
Yeah.
from that your monthly salary, you just follow and buy one index fund. You
Mm-hmm.
can buy stock like Berkshire Hathaway. Berkshire Hathaway is Warren Buffett company. His company's job is also to invest in different stocks or different
Right.
companies. So they
Mm-hmm.
have the best fund managers working from them.
Mm-hmm.
So you don't need to think of worrying which stock to buy, which bond to buy, or where to invest. They will do it on your behalf. So
Right.
you can just invest on those vehicles, on those instruments,
Mm-hmm.
and um, focus on whatever you are doing.
Mm-hmm.
But if you want to learn a bit more and really want to up your game, really want to buy the volatile stocks or cryptos or any other financial instruments,
Mm-hmm.
then you need to learn.
Right.
And if you invest time, this is not no rocket science.
Mm-hmm.
So if you start understanding how the financial instruments work, and then my suggestion will be like to understand at least, say, 3 4 5 companies, maybe two. Don't buy many stocks.
Mm-hmm.
Say, keep with 4 5, say 2 or 3 very well known strong companies who you think will be in the market after 10 15 years.
Mm-hmm.
Just buy their stock. And
Right.
then maybe two very young companies.
Mm-hmm.
So nowadays a lot of tech companies are coming who you think have a huge upside
Potential. Yeah.
potential in
Mm-hmm.
maybe 10 12 years,
Right.
and keep buying them. Keep the 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 young companies proportion, say maybe 20 to 30%, and
Mm-hmm.
then say 30 to 40% or 25 to 30%, and then rest 70 to 75% in those
Mm-hmm.
stable companies.
Right.
And
Mm-hmm.
just keep
Mm-hmm.
investing. There are many ways you can basically design your portfolio according to how
Mm-hmm.
much money you are investing, how
Mm-hmm.
much money you want to make in long term, and what is your capability of
Right.
risk taking capability, and
Mm-hmm.
your understanding capability.
Mm-hmm.
And
Let's think someone in their 20s, early 20s
mhm,
or middle,
mhm.
how much money should they invest first if someone want to start investing?
As much as you can.
As much as you
There
can.
is there is
Then,
the more you invest
mm-hmm.
is better.
Mm-hmm.
But you need to be, you cannot be like, you shouldn't chase money. You shouldn't chase a hot stock. You should first become a rational person. You
Mm-hmm.
should have a 10 to 12 years view, not a 1 to 2 years view. If
Mm-hmm.
you want to make quick money, then you will just lose money,
Mm-hmm.
because there are people waiting in this market for 10 15 20 40 50 years, and waiting
Right.
for those people to come who want to make quick
Mm-hmm.
money.
Mm-hmm. Mm-hmm. I understand what you mean.
So
Like, tell me, like, so you said as much as money they can
mhm,
invest, but what are the most safest option they can start with, because when you start, you definitely gonna look at it. It's not like you're just gonna put the money and when you're young, of course. So what are the most safest option to start with to explore the investing, and how can you up your game, as you said, after once you understand the whole game?
I would say you can buy mutual funds.
Okay.
You can buy something like Berkshire Hathaway. You can buy some index fund. If you buy some index funds and then follow that market.
Okay. And are these all like safest option available
It's
for the
for
starter?
example, if the stock market is down
Yeah.
for 10 years, for example, if you are investing every month in a index fund, so when it's going down, you are losing money. When it's going up, you are making money. So in 10-12 years, in any well-functioning country, you will make money. However, if you are living in a very dysfunctional country, where in 10 years time there is no hope, then it's a problem. But if you are living in a country where you see hope, or if for example, if you are living in UK, you can invest in UK FTSE 100, you can invest in NYSE, you can invest in the UK stock exchange, in their indexes, so just invest in the index fund. So index fund is basically follow one index, basically following a specific market. So or you can invest in something like a Berkshire Hathaway. Those are the, and then started learning the market, following the market.
I want to talk about the risk as well, because like me in my 20s, my mid 20s, I'm very scared that I'm happy to invest, but I'm very scared I might lose all my money that I've invested. So how will I cope up with that? Do you understand my point? Yeah. Like, because I don't want to lose my money. I work hard to earn money, and then
so you need to think rationally. So what is your second best option if you are not investing?
spending.
You see, so you basically one way or another you are losing your money.
Okay.
So at least if you are investing, there is a hope that you do something great. In 10-20 years, for example, in 20 years, you can be a very, very financially comfortable person. Or in 20-30 years, you will find out you earn a lot of money, and you also spend a lot of money, and you end up having nothing. So the reason you should be scared of not investing. Whereas people, you see, that's the problem with people. People gets scared with investment, whereas we should be scared of not investing our money.
I mean, movies like One Upon Wall, I forgot the name. What was it? The Wolf of Wall Street kind of thing. Like, after watching those movies, I was like, people are just there to get your money. Like,
absolutely,
like,
that's their job.
Yeah.
They are there to take your money.
Yeah.
But they are there for many years. So if you stay there for many years, you will get? You will get other people's money who are basically impatient, came to the market, stayed for maybe 6 months, 1 year, couple of years, and then left, and left with less money.
Right.
So you need to you need to do two things in the market. You need to invest your money and invest your time. If you don't invest your time, you get nothing.
I understand.
So you have to be patient. You have to wait for the right time. You need to be, if you invest in good stocks, and as I said, like invest in 2-3 solid companies whom you think will be in the market even after 10-12 years, will have a good potential, and then try to find out two, not more, two very new companies whose growth potential will be very high. That's it. If those people, if all of those people fall, then like, what is your fault? If they fall, if they fail, you fail as well.
Yeah, I understand. So, I mean, as you said, two companies. First, one of my question is, how would I know about a company's growth potential? What
Mhm,
are the points that I should consider before finding them? And also, as you said, shall I just invest, like basically put
mhm,
my eggs in one basket, or as you said, like shall I just diversify? As you said, some in mutual fund, some in
mhm,
like high performing companies,
mhm, mhm,
index fund,
mhm.
etc. Like if you
So
just explain it.
you can diversify.
Mm-hmm.
So or you cannot diversify. It depending on how good you are in understanding finance.
Yeah.
My suggestion will be, if you are not very comfortable
Mm-hmm.
in understanding finance, and if you don't want to, even if you don't want to understand and you
Yeah.
think you will not be able to understand,
Mm-hmm.
then the best shot is mutual fund
Mm-hmm.
or index fund,
Mm-hmm.
and just invest in some good ones,
Yeah.
and then just wait, do nothing.
Right. So it
do
requires
not do not
less
yeah
time
do
involved.
not diversify in 4 or 5 mutual funds. Try to
Mm-hmm.
find out one or two. Do not over diversify.
Mm-hmm.
But if you understand what you are doing, you don't need to diversify.
Mm-hmm.
Just invest in 2 3 companies that you understand, because there are people who understand, there are people who don't understand, and market has things for everyone. Now if you don't understand, you must follow the way for the people who don't understand.
Mm-hmm.
So the problem is, if you don't understand, sometimes we think we understand.
Yeah. But
So if if you are a person who don't want to understand these things,
mm-hmm.
buy one mutual fund,
Yeah.
one index fund,
Mm-hmm.
leave the money there.
Mm-hmm.
If you think you understand, you will find out
Right.
ways to understand how, like, because all the companies have their annual report published. Then you follow those
Mm-hmm.
companies, you try to understand their business, you try to understand how they will be in after 10 12 years. If you are
Mm-hmm.
confident, then put your money with them.
Right. So it's more like the more amount of time you invest,
Yeah,
the more return you can get. If you
absolutely. Yeah,
play safe, you have less
yeah,
return.
less
If
return.
you go wild,
Yeah,
then you're gonna
yeah.
have wildest return.
Yeah,
But
but like, if you
yeah,
want to if you want to go wild, as you
yeah,
said, you
yeah,
must you must have
have
have that
that.
intellectual
Yeah,
understanding,
yeah,
and you must have that patience.
yeah. And the
So
time you spend on
yeah, so
learning
do
and
not do
understanding
not
everything.
do not invest your money because someone told you to invest
Of
in
course.
that instrument.
Right.
If you are scared, if you don't,
Mm-hmm.
if you are don't understand something, do not think that you will get a much return from that.
Mm-hmm. Yeah,
So
yeah, yeah.
do something that you understand,
Mm-hmm.
and keep your money with the people who understand the market.
Right.
Go with some mutual funds, go with some fund managers.
Mm-hmm.
But if you understand, if you think that, yes, I started understanding it,
Mm-hmm.
then start slowly, and start with equity. Always start with stock,
Right.
because others are more volatile, say crypto, say that currency trading, derivatives, those are
Mm-hmm.
much more volatile.
Mm-hmm.
Stock is less volatile. Go with better companies, say go with some established companies with good fundamental, who don't
Mm-hmm.
fluctuate much. So you invest
Right.
there,
Mm-hmm.
and then wait. By that time, you try to learn how to basically value a company, how to value a stock. Oh,
Mm-hmm.
there are two ways. One is called fundamental analysis. This is basically valuing the company
Mm-hmm.
using their financial data. So this is fundamental analysis. You take all the financial data, and then you try to understand how it will work. So there are some valuation techniques. One is DCF method, discounted cash flow. So you basically try to understand how much money they will be generating in 5 10 years. There are
Okay.
some other ways as well. So in that way, you do fundamental analysis of a company, and then try to find out how much the value will be, value of that stock in 5 10 years, and then you invest. And then there are
Mm-hmm.
something called technical analysis. So
Mm-hmm.
technical analysis, if you are like a hardcore technical analyst, you don't care about the strength of the company.
Mm-hmm.
You just see the trading, you see the
Right.
pattern of the trading, the charts,
Mm-hmm.
and you see the volume.
Mm-hmm.
And by seeing the pattern, of the volume, and by seeing the trading pattern, you trade.
Do you think now we have AI and all like similar stuff that can help us to make better decisions?
Absolutely.
But I mean, are they actually reliable? Because I believe everybody's going to do the same
Yeah.
thing. They'll go
So
with AI.
so
What are
so
the best performing?
again, you need to understand what AI is giving to you.
Mm-hmm.
So if you understand, then AI will help you. If you
Mm-hmm.
don't understand, again, go with mutual funds and other things, because
Okay.
it doesn't matter how smart you are. If you don't understand, the mutual fund people will be using better AI. The fund
Exactly. Yeah.
managers
They
have
go.
more understanding. So
Yeah.
if you are not comfortable, give your money to them.
Mm-hmm. Yeah, I understand that.
And they are not in the market to grab all of your money.
Mm-hmm.
They are in the market to get, say, service charge from you or management fee from you. But if
Yes.
they cannot show performance, their fund, no one will buy their fund as well.
Right.
So if you buy 2-3 mutual funds or 2-3 good stocks, you will be okay.
Right. What about like, so nowadays I see this term everywhere, financial independence. Everybody was like, how can I get financial independence? What does it actually mean? And for someone like me in their mid-20s, what path can I take to be financially independent at certain point of time?
I think I also don't know what financial independence mean, because
It's a very vague
it's a
concept
very
because,
vague
yeah.
it's a very vague concept. But in my understanding, I think you are financially independent when you don't need to rely on any salary income as such. You don't need to work for any other person.
Okay.
So your money is working for you good enough to
Okay.
make you enough money
Mm-hmm.
to comfortably live your life. So, but the money need to come from many sources. For example, you have investment in stocks, you have investment in real estate, you have investment in, say, 4 or 5 asset class, and then the money that is coming to you is
Right.
more than enough to live rest of your life without doing anything.
Okay. Yeah. I
It doesn't
understand.
mean without doing anything,
Yeah.
without working for other people.
Right. If you don't want to,
If you
basically.
don't
Yeah.
want to,
Yeah. Yeah.
if
Yeah.
you are
Right.
working for
Right.
other people, then you are
Yeah.
not financially independent. You are working for some other people.
Right.
But if you are, say, if you are maybe doing a small, if you are working for yourself,
Yes.
even, and then you have some like whatever investment you have, and the return you are generating from that
Yes.
is enough not to live now, to live rest of your life. So
And the investment strategy you told me, if I follow that, of course, at the start, I can't go all out. I'll start to learn how things work. If I follow that path, is there a chance, would I lead towards a more, as I said, in
financial
financial
independence,
freedom?
definitely,
Okay.
definitely. My advice will be, try to invest as much as you can.
Yeah. Right.
Invest first, start in the safe instruments, and then gradually, if you are comfortable, invest some in the risky ones or the volatile one.
Right.
Just keep investing in less volatile or less risky instruments for 10-12 years. That's it. Because as a person, another thing I believe is,
Yeah.
our main job as a person is to mitigate our risk. Whatever we do, we
Yeah.
basically do to mitigate our future risk. That's why we go to school, we go to universities. Why? Because that basically will enhance our earning potential, so we can save ourselves from uncertainties. So even from the earlier days, our ancestors basically trying to mitigate their risk, in different ways. We are also doing the same. So we need to find out what risk we have in our life, what risk is waiting for us in future, and how to mitigate it. Now we live in a highly capitalistic world. Every solution of every problem is almost every problem is basically money.
Yeah.
Right? If you have any problem today, the
One of the leading
one of the
causes, like
leading
causes.
solution
Yeah.
is money.
Yeah.
Now what you need to do is you need to find out ways to enhance your income, your and then investment is the most is the main way to increase your future income. Unfortunately, what we do is we basically increase our cost.
Yeah.
Whenever
Yeah.
we become a bit comfortable, we
Right.
increase our cost, whereas we should have increased our earning potential.
Yeah. Yeah, I understand. What about, so if I want to become rich, can I do it with my salary? Because I mean, see, people say, how do you become a wealthy person? Because it's not like you got have like generational wealth,
Wealth, yeah.
and then you just started rich. If someone like me who wants to become rich, I have done the investment. I am, as you said, I've been investing for a long time. How would I reach to that place from where I have started? Is it the answer? Is it just investment, or is there something else to it?
Well, now the first is, if you want to be rich, then what is rich? How much money is basically rich to you?
Yes.
This is one.
Yeah.
If you want to be, like if you in your definition, if being rich means to say, if you have a savings of £100,000,
Okay.
maybe you will reach it.
Yeah.
If with your salary and with your investment.
Right.
If you want to be a millionaire, if you want to be a billionaire with salary, you may not be able to do it. You maybe
Right.
need to be an entrepreneur where you get more money, of where you have the chunk of the profit coming to you.
Okay.
So it depends on how much money you want to make. So if you really want to make lots of money, with salary may not be possible. But if you are earning good, if you are a working professional and you are investing
Yeah.
a higher percentage, maybe you become financially comfortable at some point. But if you want to be really rich, if you want to be a multimillionaire or a billionaire, there is no way you can
Do it with the
for
salary.
example, as we were talking, there are 4 factors of production in economics, right? So it's land, labor, capital, and entrepreneurship. So
Yeah.
whatever you do, whatever you want to produce, you must need these 4. Any resources you need to produce anything will falls in either land, labor, capital, and entrepreneurship. So the labor is the workforce, right? If you work for a company, then you are basically in
The
a
labor.
labor
Yeah.
to the company, and
Yeah.
then that's why they pay you salary. The company needs a land. It's either a land or a building. So whatever land they use, they need to pay rent. They either buy the land. If they buy the land, also it's they need to use financial resources for that,
Yeah.
right? Or if you are renting it, then you pay rent.
Yeah.
So then the people who hold the land, they gets the money. If the economy is booming, then always rent price, land price goes up, right? And the third one is the capital, is the money needed to run your business, to buy that land or rent that land, to build the factories, to build the your offices. So and then you pay interest for those capital, right?
Right.
So you either borrow it from a bank, borrow it from your friends, or even if it is so the capital is basically, in this setting, capital is the borrowed fund. So you pay interest for that, usually say to the banks and other thing. Fourth is entrepreneurship, where you take the risk of that capital and you recruit labor, you borrow land or you pay rent and use that land, use the labor to produce something using that capital, and you take the risk of the capital, and then what you get is profit. So the profit is the last thing. So you pay everyone, and then whatever rest is basically there is either for you to take home or to reinvest in the business, right?
Right.
So the more the business grows, the more proportion goes to the entrepreneur, because labor
Right.
is fixed. Because if the company is doing well,
Yeah.
your salary do not raise every month.
Yeah.
But if the sales is growing every month,
Yeah.
the profit is growing every month.
Every
It can
month.
profit can grow every day, profit can grow every month, every
Yeah.
minute.
Yeah.
But salary increases only once a year, and it do not grows in proportion of the profit grows, because if the company is paying loss, they don't usually cut your salary. So the progression in salary is very conservative. Same with land. Maybe if the economy is growing, the land price also grows, but it's also less than the progression of the economy. Otherwise, economy will fall down. If the cost of the production is higher, then the cost cannot be profitable. In capital, whatever happen, capital is interest is fixed. If the economy is growing, sometimes interest rate even goes down.
Yeah.
The only thing grows with progress is profit, is the chunk of entrepreneur. That's why nothing can beat if you are doing business. So if you really want to be rich, then you need to be an entrepreneur. Now I would say, if you want to be an entrepreneur, do not chase money. Do not say do not think you want to be rich. If you want to do business, if you want for being rich, there is a higher chance that you may fail. Because if you want to be an entrepreneur, you have to have a different mindset. In that mindset, you need to basically solve a problem, not your problem, people's problem. So don't think about making money if you want to be an entrepreneur. If you are just investing, if you are a financial trader, if you are a financial investor, it's fine. You think about only your financial well-being. If you are a financial trader, it's okay to think only about your financial well-being, because that's your job. But if you are an entrepreneur, do not think about making money. Think about solving a real problem. Now, solving real problem brings you lots of money. Now, the problem may exist, the problem may not exist. You need to, for example, before Facebook, we even didn't know without Facebook our life will be miserable. But now, without Facebook, even without Instagram, our life is unthinkable. So someone basically told us or guide us towards this path, and we made him millionaire. So it's a made up problem, but it was a genuine problem that we had, but we never realized.
I understand.
Okay. But there are some other type of problems. For example, if you want to build a cement factory, a rod factory, then you need to find out whether the problem exists or not. So you need to find out whether in your operating territory, whether there is a shortage of cement or not. That's it. If there is a shortage, you don't need to do any innovation. You just find out whether there is a shortage or not. Then try to find out ways to produce cement at a cheaper rate, or at least at the same rate,
to fill the gap.
So just you need to produce the same rate your competitors are produce. You need to maintain the quality, or maybe make a bit better, because you are a new entrant. That's it. If you want to open up a restaurant, you need to find out a place where there are people and there are maybe less restaurants. If there is no people or are lots of restaurants, there is no point of opening up another restaurant.
Makes sense.
So you need to find out a problem, and you need to try to solve it. That's the way to do business.
Right.
And again, you have to make your cost low. Even if you are a businessman doing very well, keep your cost low. Try to either grow your business, or if you don't have the capacity to grow your business, there might be some, like restrictions. For example, if you are running a small business,
Yeah.
then, for example, you are running a small shop but doing very well, you are running a small restaurant doing very well. Sometimes you think, okay, fine, let's open another one.
Yeah.
But you cannot be in both places, and then it backfires. In that case, it's better to run one and then use the proceed to invest in stocks or in mutual funds. So do not stop investing. Do not go to a bigger house. Do not buy a bigger car straight away.
Right. It's actually been a really interesting conversation, and I would love to talk even more, but as we have a time constraint. But before we finish, I would like you to give our audience one advice out of all we have discussed that they can take home and they can do to be a better financial person in their life.
That's my suggestion will be, try to reduce your cost as much as you can without hurting your
Quality of life.
quality of life. Think about your quality of life as well. Whether your understanding of quality of your life is basically a proper understanding or not. Then invest. In all means, invest. And do not follow other people. Most of the people in this world are lost. They are also struggling to find their own way out. Try to find out your own way,
Yeah.
to reach your own goal,
Right.
rationally.
Yeah, that makes sense. And for everybody who is watching this and struggling through their financial life, I know it's hard, but what we can do is we can take the first step, start understanding what are the things that we're doing wrong every day, and then just start improving, start investing, as Rajib said, and hopefully it's gonna help you. So thank you. This is Curious You. Thank you, Rajib, for being with us today.